Welcome to Mrin Talks, my vlog on the steps of investing. In vlog 35, I'm going to be covering about mutual fund documents. Mutual funds are subject to market risk. Please read the offer document before investing. I'm sure you've heard this disclaimer so many times in the past, but have you actually read these offer documents? Yes, I know they're very voluminous, going into 80 pages and all of this, but it is important for you to go through the offer document just to confirm what is the investment objective, what are the risks associated with a particular scheme. So let us understand, what do the offer documents have in them? Well, they're basically consisting of SID, which is a scheme information document, and the statement of additional information. The SID is a compendium of all scheme related information. So it has the following information. First and foremost, what is the investment objective of the fund? Is it capital growth? Is it capital preservation? What is the asset allocation, which means what is the percentage allocation to debt, percentage allocation to equity, if there is any allocation, for example, to gold or to international security, all of this would be mentioned in the SID. The investment strategy, which is the approach or the style that the fund house would follow, would also be mentioned. The benchmark of the scheme. Now, this is really important because the benchmark is always used to compare the performance of a scheme, and hence, it will be nice for you to know what is the benchmark of this particular scheme. Of course, what are the risk factors that are associated with this particular investment? For example, funds which are investing in international stocks will have currency risk as a risk factor. Of course, the standard risk factors like market risk, credit risk, interest rate risk would be mentioned as well as part of the risk factors in a particular scheme. The fund manager of the scheme and the experience of the fund manager would be mentioned. Past performance of the scheme is mentioned, and this past performance can be used to guide your decision because you can assess the track record of a particular investment manager. Of course, very importantly, all fees and expenses will be mentioned in the offer document as well. Finally, the investment options, which is regular, direct, dividend payout, systematic investment plan, lump sum, STP, all of this information would be part of the scheme information document. Now, the SAI, which is the statement of additional information, it's a supplementary document to the mutual funds prospectus, and it basically contains all information regarding the fund and its operations. So the SAI has information like what is the constitution of the fund, who are the trustees, who's the sponsor, who's the asset management company, all information on the key personnel and associates, like for example, who's the registrar, custodian, auditor, banker, etc., and if there have been any financial or legal issues. Now, it is difficult to read this 80-page document. So, SEBI has allowed that every scheme has a KIM, which is a Key Information Memorandum, which is an abridged version of the offer document. So, the KIM really consists of the details of the asset management company, the scheme, such as the mutual fund's name, its trustees, details on the scheme, like for example, when is the scheme opening, when is it closing, what is the investment objective, the risk profile, the name of the fund manager, benchmark, etc., options and plans offered by the schemes, if there are any loads, and what are the expenses in the particular scheme. The scheme's past performance details are also mentioned, contact details of the registrar and transfer agent, and comparison with existing schemes would form part of the KIM. Essentially, I use these documents to just understand if there are any specific risks that are associated with a particular scheme. Yes, debt schemes will always have risk like credit risk and interest rate risk. Equity schemes will have market risk, of course, associated. But the whole idea of reading this document is really to understand if there is a specific risk that's associated, and Also, to of course confirm what is the investment objective, the investment style of managing a particular scheme. I often find that investors invest in these schemes just on the basis of what they read somewhere or basis of what someone tells them. It's always nice to just go through the KIM because it just allows you to confirm the information that's been given to you by someone else. Make sure you click on the bell icon to subscribe. I do look forward to your feedback. Cheers.